Oh, once again. That's right, people. It's the best podcast in Monmouth and Ocean County, hands down. The votes are in. Totally local podcast covering all the local, lovely businesses, colorful characters, entrepreneurs in and around the Jersey Shore area. But I gotta say, people, I wish I had a little more somber music, but this is a little peppy theme song for a serious topic that we're going to get into here. We got the guys, both of them, from LG Insurance. Aaron and Jason, LG Insurance. How's it going, people?
Doing well, thank you.
Huh?
The Totally Insurance pod.
I don't know whose idea it was, but I think it's a very important topic to get into because I don't think people talk about this stuff enough. Obviously people don't want to deal with certain things. People don't want to talk about life insurance. But I got news for you, people. We're all gonna die. All of us are gonna die someday. If your children are listening, I apologize. We're all gonna be dead, dust, and gone, and no one's gonna care. Unless you got that life insurance, because then everyone's gonna care that you're alive and then you're dead. So, guys, this is something people don't want to talk about. I know of a lot of instances, or I've heard of a lot of instances, personally, and other people's stories where, like, somebody kicks the bucket, somebody croaks, somebody passes on, whatever you want to call it, and like there's no plan, there's nothing set up. So,
to that point, Andrew, it's the GoFundMe pages that make me sad, because those are the individuals that were unfortunate enough not to be able to get the life insurance or speak to somebody to get the life insurance.
Yeah, that's some like hindsight being 2020 kind of stuff for the GoFundMe. There's some of them out there where I'm like, all right, I'll that makes sense, GoFundMe.
Agreed. Yeah.
But
definitely.
when it comes to life insurance, it's relatively, correct me because I'm a talking, walking buffoon. But like, correct me if I'm wrong here. When it comes to life insurance and a life insurance policy, it's not like very expensive, right?
No, that's one of the myths about life insurance and why people don't get it to some degrees, because they think it is expensive. Rates have been coming down for years because people are living longer.
Yeah.
Due to health, just taking care of themselves, but also modern medicine is keeping people alive a lot longer than they were in the past.
And in a healthy way. They're not, they're people are living healthy lives.
Yep.
And that's obviously great. We're going into the future. There's going to be robots. You're going to have robotic implants in your brain. There's going to be holograms, floating cars, all of it's coming right around the corner.
We'll be Terminators.
Yeah, exactly. So, but in the meantime, I think people, as far as like life insurance and the origins of life insurance, is it tied into everything that people have to prepare for? Like when somebody passes away, I don't know if there's a lot of Big Lebowski fans out there, but there's a lot of costs that go into, when somebody passes away, all the things that go into it. Is that kind of, are those costs kind of tied into life insurance? Is that kind of why it came around? Like, why did life insurance come about?
No, you're right. It was primarily in the beginning for final expenses, right? Because to bury somebody is not cheap.
Mm-hmm.
It's expensive, especially today. It could cost up to $20,000, and for some people, that's just too much money. Yes, costs as far as planning for expenses, that is one of the primary driven reasons why people get that.
Mm-hmm.
For example, they don't want to have a loved one stuck with a mortgage, for example.
Yeah.
So they'll make sure that they have enough money to be able to pay that mortgage, for example. They might have kids and they want to make sure they can go to college anywhere they want. So they're able to pay for tuition, for example. So those are a couple of
how do you if somebody comes to you and says, look, I'm going to die, and they want to pay for their kids' tuition.
Too late.
How do they I'm going to die, meaning eventually we're all going to die.
Right. It's inevitable, correct.
Yeah, I'm inevitably going to pass on. So I want to make sure that my kid can go to college. like how do you go about like planning, like how do you go about planning that financially? Like what do you have to spend on life insurance every year to make sure you have enough money for tuition?
Right. There's a calculator. They made it real simple for us. There's calculators out there to figure out what the future cost of what the tuition would be.
Good.
A lot of times I'll ask the client if they have an alma mater they would like to see their kids go to. That's one way to go about it. Some parents are saying, hey, listen, I want to make sure they can go to any school they want. So let's just say they go to Harvard. What's that going to cost? And then if they don't have any really, idea of what kind of school, I just pick a state school. What that would cost for 4 years. Say,
I mean, it'll give them. What are like? Okay, so I have questions about everything. So
go ahead, shoot. Yeah.
What like? Okay, so you get the insurance. Are we talking like a range of like a few $100s a year to like a few $1,000s a year? Like what's the range on what what's a modest what's a range that people are going to be spending on this?
That's the $1 million question, but it's very hard to determine. There's so many factors and variables that go into it. And the number one is the health of the client. They can tell us as much as they can, but we won't know exactly where they will fall in the health rating. And that's where the ultimate cost comes from until they have a medical or they get interviewed and they learn really a lot more about the client. That really dictates the cost, age, health, and the amount of insurance you're going to get.
Okay.
So it can range anywhere. To give you an idea, on myself as an example, 4 years ago, I got $1 million, highest rating. They thought, I was super healthy. It cost me $600 a year for 20 years. Now I have clients who smoke, who may be a little overweight. It could cost a couple $1,000s a year. So it really varies. Our job as advisors is to try to get as accurate as possible with our illustrations so they can have a really good idea of what it will be with no certainty, of course.
So ironically, the if you're keeping yourself alive, your life insurance is going to be cheaper. If you're a healthier person, if you show up with like a pack of Pall Malls and like a Burger King bag, and like you're sitting down with Jason, you're like, I need some life insurance. It's like, whoa, buddy, hold on. All right, that's good too.
That's some of the information we ask ahead of time. We ask certain vitals, if you will, and we can kind of tell them, hey, listen, this is what it's going to look like. I don't want them to have a sticker shock once they get approved.
What's the deal with taxes on that? Like, say you do get, you have this $1 million policy and the missus is just salivating, just stoked, just waiting. You're on death's door. Right. She's basically picking out like, her Mercedes and her next, vacation, just waiting for you to just totally just die. And she gets a check for $1 million. You got to pay like taxes on that. You don't just get like $1 million, right? No,
it's tax free.
It is?
It's written in the IRS code that life insurance benefits are tax free.
Wow.
You don't have to report it as ordinary income. No.
Whoa.
That's the beauty of the insurance is that all the money goes to your beneficiaries completely tax free.
Oh, that's cool. Is there any, as far as paying into, there's no tax benefits to paying into life insurance. You just get the benefits on the end.
No, it's usually after tax dollars that are used.
Okay, all right.
So you're paying it out of your checking account for it.
That's why there's so many of those like 48-hour ID discovery shows about people just wanting that life insurance money because it's tax free and you could just walk away with that.
Correct. Most people are happy to see their insurance agent if, God forbid, something was to happen, because they know we're coming with something that's going to be able to help them in the short term get through any financial matters.
So, Aaron, you got a very interesting green screen on there. It's amazing. It's like you're up in Hamilton or somewhere. I don't know where you are, but.
Jamesburg.
There you go, Jamesburg. There's a good bagel place around there. I believe it's called Bagel Giant. I could be wrong.
I only passed a quick check in a CVS.
Oh, bummer. So, Aaron, you got a couple kids. You got a wife. You got a lot going on. I'm assuming you have like at least a couple, like life insurance policies, one for each kid.
My kids each have a life, and well, Jason, I don't know, is Dare's policy ready to go?
Yeah, it's we're pretty much ready to go. Yeah.
My older daughter has a life insurance policy. My younger daughter, we're in the process of finalizing hers, and it's not the morbidity factor that we have life insurance on the kids; it's the future factor, right? So we look at a couple things with respect to the kids, and these policies are cheap. I mean, I set them up so that we fund them at $50 a month, and they just fund forever. But they're whole life policies, and they're there for two reasons. One, there's a cash value at a future date. So when they become of age, if they want to have the money, there's a little bit of cash in there. If two, something happens later in life in their young teen years or in their late teen years where they become ill and then uninsurable later in life, well, then we have this life insurance policy in place that'll protect them forever and will continue to grow with them. So they're not significant money, but it's a safer bet to purchase these policies early in life when everybody's healthy, and God forbid something happens and makes you uninsurable later in life. So yeah, my kids have policies. My wife and I have policies. I've had whole life policies on myself. You know, I cashed in a whole life policy to help fund this insurance agency, right? So I cashed that in to help start my business. So right now I only have term policies on myself for a little bit of money. I'm not disclosing just in case my wife is watching. Enough for her to get by for the next period of time. But I have a plan. You know, I'd like to buy a new whole life policy on myself and attach a long-term care rider to it, right? My goal is to have the right insurance in place so if something happens to me, nobody has to hate me because there's going to be enough money coming in, right? So life insurance, long-term care, disability insurance, like I am well insured should a situation arise that my family will be well taken care of and nobody will suffer or struggle, you know, with having to take care of me, right? Because we're more expensive disabled than we are dead.
Yes.
You know, she can get a check and go get another husband and be happy again, and you know, life will all move on. But there's the disability factor in between, or the long-term care factor. You know, if you had dementia, getting sick, and you need to be in a facility, that those expenses will just absolutely bankrupt you. And they've bankrupted so many families, you know, with having to put their loved ones into a facility for $100,000 plus a year.
So yeah, you just like opened up a whole thing that I don't even, because like I said, I'm very ignorant on many things, and this is one of them. You know, when I initially said, oh, you have insurance policies because of your kids, I meant like you, like Aaron, have insurance policies for your kids.
Oh, yes, I have those. No, the answer to your question is yes.
But you brought up such an interesting fact, because like, okay, they're children, obviously, but eventually they're going to be like, you know, old people like us, eventually down the road. So like you're kind of setting them up into adulthood, into being way more prepared. You know, in my case, my parents, you know, just basically threw me to the wolves. I have no idea what's going on. I go outside, there's bills, there's taxes. You know, nobody prepares you for that. You go to college, they don't teach you anything in college. I left college, all I had was a beer bong in one hand and you know, nothing in the other. So I had to go you know, I had to go into this world and figure this stuff out for myself. And my poor kid, I don't want him to have to go through all that. I want him to be at least a little prepared, so that when he tells me he wants to drop out of college and I yell at him, at least he has life insurance, he knows how to pay taxes, and if he wants to go join some like traveling circus, you know, at least he has some things, you know, in his back pocket, and you know, that kind of thing.
Throw in a 529 and he's all set, right?
Perfect.
I mean,
Yeah, and as you can tell, it's not a big expense to do that. But to just take a step back, Aaron was talking about getting a new whole life policy. One of the cool things about insurance is that you can convert your current insurance that he has right now. If you have term insurance, you can convert that without having to take a medical to get whole life. So if you had a really good health rating and then all of a sudden your health deteriorated for whatever reason, and you wanted to convert it to whole life, the life insurance company is obligated to go back to your initial health rating, which was better, to issue that whole life policy without having to take a medical. So that's a very cool thing that insurance companies came up with.
Yeah, so I'm dealing with this, you know, in my family, there's a personal issue. We have an elderly person, you know, was kind of taken care of, and, you know, all the stuff that's going on now. She fell ill, had, you know, was a little more disabled, needed a nurse, needed help and stuff like that. So in those cases, could you go into more detail kind of what you were just saying, as far as like, if, it really made me think about my parents and my wife's parents and stuff like that. You don't know what, you don't know, if you don't know, you don't know what's going to happen at that point. Like what you guys are saying, you didn't pass on yet, you didn't expire, you're disabled, you have to go into a care, long-term care facility, you have to get physical therapy, you're in pain, and you don't know what's going on. Like, how does a life insurance policy relate to that in more detail, as far as between living a healthy life and then passing on?
Well, like Aaron said, if you want me to take this, Aaron, one way to do it is to, when you have a whole life policy, is attach a rider to it that covers long-term care expenses. So if you had a person who had a policy on themselves, and then they had a long-term care event where they need to be in a facility, for example, for around-the-clock care, it could be Alzheimer's, you can actually tap into your life insurance benefit on a tax-free basis to pay for those expenses.
Wow.
So that's one way to do it through life insurance, or you can look at a standalone long-term care policy as well.
Okay.
So there's multiple ways to do it.
So another thing that Aaron touched upon, as far as, he has these policies, his kids have these policies, and then if they get to a certain age, you could just cash that out and go have a nice fun time in Vegas. Woo! No, but seriously, you mentioned something about like cash, like the kids can cash it out at some point. How does that work?
Well, Aaron, you ultimately own the policy, right? You're the owner of the policy. So by setting up life insurance that way, he dictates how the funds go. And
but when they come of age, I would transfer the ownership to them at that point. And I would either stop paying and they would pick up the payments, or we'd stop paying altogether. Like, there's just so many nuances and so many ways to set these life insurance policies up. And, this is, working with a good advisor and not a 1-800 number off the television or off of an internet ad is where you really gain benefit, because, Jason and I have access to all of the insurance companies, or most of the insurance companies, to shop rates and do things and get creative with policies and design something that makes sense for the individual, for the family. So if we were writing a family of 4, we could write 4 insurance policies and still keep the budget under, $200 a month, depending on, what things look like, depending on how much insurance we want. And the budget can go as high as anything else. $1 million policies are in premium are out there, because those are other tax shelters for people to buy life insurance to prevent against estate tax issues later in life. So there's so many different ways to design things and get into the details. And that's where, working with Jason, and that's, where Jason and I get along well, is that Jason handles all the life insurance for our agency, the life insurance and disability and the long-term care. He handles all that stuff because he's the expert, right? He's the SME in that space to help people and work with people to design the right policies for them. So there's no one answer is what it comes down to.
How do you get people like I'm becoming a fan of this whole life insurance thing here. Like, this seems like something that people, I'm not even BSing. Like, this seems like something that people really, really need to think about and really, really need to consider. Like, is there a lot of people out there where you kind of like, oh, hey, you should probably think about this. You're at your cousin's wedding, and people are asking about what you do, Jason, and you kind of tell them, and they're just like, oh yeah, whatever, and you're like, no, seriously, you need to think about this, and they just kind of walk away, and the next thing you know, piano falls in their head, they're dead, their family's devastated, they go bankrupt, and their lives are completely ruined. How do you convince people, like, before a disaster, a tragedy, something, life altering, like a life altering event? How do you convince people while their lives are good to think about things that could go wrong?
No, great question. And I look at it as if not necessarily convincing, it's more educating. I'm able to go to bed at night knowing that even if someone doesn't do the life insurance, which makes sense to them to do it, at least they know about it, and they know that it's something they should do, maybe can do, but right now they're not doing. So educating them tends to be the most important thing. And then really just getting to know them. But unfortunately, what happens is something usually happens in their life to someone else.
Yeah.
That triggers something. For example, I'm speaking with somebody who tragically, their brother was found passed away in a car in New York, and they have no idea why. I mean, there's no foul play, there's nothing. It was just one of these tragic accidents that the man passed away, and it completely spooked his brother. And now he wants to talk about the insurance. So what I find is usually it takes something to happen to somebody, unfortunately, for them to really start thinking about, wow, that can happen to me. So what I try to do is try to at least reach out to people on a more proactive basis to prevent that from happening. So it's an uphill battle to some degree, but I would say the people we talk to, they understand it.
Yeah, good. Because there's like, I was hearing about this story the other day. So this is so messed up, but like it's sad. Some lady's talking to her daughter, gets in a car, they're getting ready to go somewhere, and the mom's like, "I feel funny," and dead, like aneurysm of the brain, dead, like gone. Like there's no like, oh, can I resuscitate her? Is she choking? No, she's just dead. And like people don't realize that you could just instantaneously die at any second, and this life insurance could like you've kind of, I don't know, you've opened my eyes at least to the idea of like it's not just about oh, somebody passes away and I need to pay for funeral expenses, which is a very important thing people really do need to think about. There's that on, like, in my opinion, that's like the smallest, bottom level foundational, let's take care of this. But you guys have kind of brought up a lot of good points where it's like, oh, you're healthy now. If you get a policy while you're healthy, it's going to be in the long run less expensive. If you are sick, it might be kind of too late, right? Like if you're sick, God forbid somebody has some kind of like, illness that's just gonna, eventually you're gonna die. You can't just go to a insurance, like insurance companies need to like really kind of hedge their bets, so to speak. So if you go in there, with like, you're on, some kind of like, dialysis, or you're not looking good. Right. You're missing an organ or two, and you're going to die eventually, or much sooner than other people. Like getting this insurance policy before that happens is less expensive. It's better.
Most ideal. Yeah, it's the most ideal way to do it. As your medical history becomes more and more extensive, it becomes more and more difficult for someone like myself and Aaron to get them life insurance. And life insurance that's at a reasonable premium, because the more unhealthy you are, it's not completely impossible. You become more of a risk in the eyes of the insurance carrier. So they're going to make sure that if they do get insurance, you're going to pay for it.
What if you're like, okay, not incredibly healthy, and you get a policy and it's amends, whatever you get, and then you decide to kind of change your life and get healthier? Could you go back to an insurance company, or could you go to a different insurance company and be like, look, I got my stats up, my blood pressure is down, my heart rate is my resting heart rate is phenomenal. So like, can you go back and get a better policy, or get the one that you have kind of reduced in payments or something like that?
Yeah, absolutely. The one that I'll give you an example. I had a client who, because she was a casual smoker, we unfortunately had to put her down as a smoker. We waited 18 months, went back to the carrier, showed proof that she wasn't smoking in 18 months. She got a non-smoker rating. It's very common for people who are overweight. They want the insurance now. They need the insurance. They lose over several years 100 pounds, for example, or got down to an ideal weight. We go back to the underwriter and we get it reevaluated. Yes, that's something we advocate. We let them know that something's better than nothing. So have some insurance in place today, and we'll reevaluate it. And that's one of the things I think that separates us from most, is that we don't set it and forget it with our clients. We actually sit there and we will advise them on an annual basis at minimum to say, hey, listen, let's revisit this insurance. Let's get you a better rate. How are you doing health-wise? What's going on? Unfortunately, that tends to be one of the myths, that if someone had a medical history, for example, someone had cancer and they've been in remission for 5 years, a lot of people think they can't get it. The fortunate part is that a lot of carriers will look at a case like that, and you could get a pretty good rating with the health carrier. So that's another myth that people tend to fall into is that I had something in the past, I probably can't get it, so I'm not going to even try.
Wow. All
And
right.
I'm like, no, you at least try, because people, some carriers will say, I'll wait 5 years on a cancer patient.
Okay.
You're on risk for 5 years. So that's another myth we try to get rid of.
Well, let's do a little role playing here, all right, Jason? I'm coming into your office. Aaron is
I'm on the spot here now. I'm on the spot.
Yes.
All right, here we go.
Aaron is dragging.
I got an online app ready to go, by the way, Andrew.
Aaron's dragging in his Aaron's a client of yours, very happy client. He's dragging in his elderly dad. I'll be playing him. He's very grumpy. He doesn't want to think about dying. And he wants to, Aaron wants to make sure that this guy's covered in case of any kind of disability. He has to go into some kind of a long-term care facility, or he's just going to drop dead, and Aaron wants to make sure that all the expenses are paid and stuff. So,
money.
Yeah, Aaron, you take it off. You start it off. We're walking in the office. What do you say to Jason? Go.
Jason, meet my dad.
Morning. Nice to meet you.
Where am I? What am I doing here? Who is this man?
Well, I work with, I was referred to you by Aaron, and I help people with their insurance needs. How can I help you guys today?
I don't know. I'm perfectly fine. Why, Aaron, why are you doing this to me?
Jason, we need to make sure that, I'm protected when my dad has to go into a nursing facility.
A nursing home? I don't want to go in a nursing home.
Well, you know what? Fortunately for you, no one wants to go into a nursing home. We can actually help out and see you at home care if that has to come to that.
Oh, that sounds lovely. I like that.
You like staying in your home?
I do. I love being able to yell out to Aaron, where are you? And he comes and he helps me.
Well,
I'd rather have a nurse take care of that, and I'd rather
right.
So we don't have to worry about the expense tomorrow. So I don't have to sell my house to have to pay to.
Aaron, I don't want to be a burden. I don't want to be a burden to my son, Aaron. I don't want to be a burden. I don't want to think about dying, Jason.
I understand.
I
understand. So, all right. So you don't want to be a burden, and Aaron wants to make sure that he is able to leverage other monies outside of his own to be able to take care of his father, if God forbid something was to happen in the future. Have you heard of the concept of long-term care insurance before?
Long-term care insurance? What does that mean?
It's really a fancy term for monies that will be issued to you if you had to use it on an ongoing basis for day-to-day care because you had a long-term event happen.
My hip hurts. I fell down.
Okay. That could be a long-term care event if it's long-term, but...
Why are you laughing at me, Jason? I need help.
I'm not. I'm trying to be serious.
Aaron, what are we doing here, Aaron? What's going to happen when I die, Jason? When I'm dead? What's Aaron going to just kick me to the curb?
Jason, how much is it? How much is it?
How much is it? All right. Well, I'd have to gather some information before we went down that road.
Just tell me how much it is.
Just give me a number.
Just tell me how much it is.
Just give us a number.
It is. I wish it was that easy.
Oh, God. What if I don't feel good right now? I might. Oh my God. How do I make sure that Aaron's covered? How quickly can we do this? I'm almost dead, Jason.
Well, if you're almost dead, which means that do you have an illness or anything like that at the moment?
I have a couple. I have a cough. I was in the war.
If you have an illness, long-term care insurance may be more difficult to get, especially on a standalone basis. But we still could look at life insurance with a long-term care rider. How old are you, sir?
I'm 85. I don't want to think about these things, Jason. Mortality is a very frightening subject.
Well, 85 is going to be extremely difficult to get life insurance, or any type of insurance, because of the age alone and the risk that it's associated with that. So, I would probably start thinking about maybe self-insuring to some degree, because due to your age, unfortunately, it's a disadvantage at this point in time.
What about? All right. Well, you've given me something to think about. My wife, she's 65.
Okay.
Is that something? She's going to die eventually. Aaron doesn't want to take care of her.
Yeah, being 65, it does open up your options a little bit more.
Okay.
Sure, absolutely. And that's something we can look at either with a life insurance and a long-term care rider. We could look at a standalone long-term care policy, or they have this new strategy where you can leverage insurance and life and long-term care together. It's one
Interesting.
policy where you make initial investment and you don't have to pay for it any longer. And then you have the insurance that pays a benefit out for funeral expenses, for example. And it also has long-term care tied to it as well. So there are options for your wife. Absolutely.
Jason, thank you so much. You're so informative. Aaron, my son, you're so smart for taking me here and finally getting this taken care of.
Well done, Aaron. Yes, it's
Aaron,
good to get ahead of it.
My boy. Aaron, I don't feel good. Tell your mother I love her, and we got to get her some insurance. And scene. Thank you for playing. That was great, guys. I mean, I think
I hope so. I'm sorry I couldn't keep the straight face. Andrew, you're quite funny.
I'm old. Well, I try to keep it rolling. I gotta keep you on your toes, Jason, because these people are going to be limping into your office.
Thank you.
But
you know what? With insurance, though, to that point, Andrew, you do have to kind of keep it light. You're right. You're talking about events that most people don't want to talk about. So you try to keep it as light as possible.
So as far as like what you would say, even before Aaron would shuffle his dad. I've met Aaron's dad. He's a very healthy guy. It doesn't sound like that at all.
He's great. Yeah, he doesn't sound like that. No.
Big shouts.
I catch him younger. You need to be younger.
But like, how would you recommend, say, somebody approaching, even getting somebody to come in and sit and talk to you? How would somebody kind of approach their parents to be like, look, we got to deal with this? Like, how do you even bring up a topic like that?
That's a good question. Sometimes kids start if there is monies that are going to be handed down from generation to generation. The kids tend to think about it as a way to protect inheritance, because they don't want their inheritance to be used to pay for long-term care expenses. So they understand the leverage of insurance. You pay pennies on the dollar for the insurance, protecting millions of dollars in the future, right, to pay for the long-term care. That's one way they tend to think about it. Or, again, it goes back to them knowing somebody who's taking care of their current parent. And they're like, hey, listen, I just don't want to deal with that. I want to make sure my parents have the proper care, and I'm not going to be, I don't want to say inconvenience in any way, but I want to be able to keep my life the way it is and also help them at the same time.
Wow.
Because long-term care, it could be quite devastating, especially if you have Alzheimer's. It can really do damage mentally to the caretaker, the family member.
So before we got on the air, earlier, Aaron, we were talking. Obviously, when we put this out there, it was life insurance. We were talking maybe just bring up disability insurance. What's how is that related? What is disability insurance basically?
Aaron, you can take that one.
He's like, what?
The simplest of it is it's paycheck protection, right?
Yeah, income replacement insurance. That's what I call it. Yeah.
Something. If you have a life-changing event where you're unable to perform your job duties, go to work every day, there's supplemental income via an insurance policy that will then protect you.
Aaron and I think this is the most important insurance you should have.
Wow.
Because the reason why, if you think about it, Andrew, what's your number one asset?
Me.
Correct. There you go. Your income capabilities, right?
Yeah.
Yeah. I mean, a lot of people think it's their house. I was like, well, without your income, you didn't have a house.
Yeah, exactly.
So that we try to educate people that think about your income as literally the end all be all of life, because everything has a price to it, food, clothes, etc. Without your income, you can't get any of it.
So
it can be very difficult.
Is the disability insurance based on, say, your income and taxes, or is it based on like, hey, I'm going to take an inventory of what it costs to take care of my family, pay my bills, all this stuff? What side of it do you look at, the income side or the actual cost of living?
You can go either way. They're both great points. What we do is we start off the conversation with saying, all right, how much income do you need to protect? Right. Some people are like, I don't know. That's number one. I have no idea. Never thought about this. I was like, okay, let's show, us protecting the max amount of income. Then we show the proposal, and they're like, okay, this looks great, but you know what? Thinking about it, this is actually our core expenses. We want to protect that. So then we customize it. Some people have a number in their head. As advisors, we ask all those questions. We say, what's your core expenses, et cetera. That's also considering not only your food, utilities, this and that, but also going out. You still want to be able to go do things, or have your family do things. And then they say, okay, is there anything above and beyond that you want to protect? And then we run the proposal that way. So you can go either way, or do both at the same time.
What were you, Aaron? You were going to say something?
It's all income based, because if your expenses are way greater than what you're bringing in, you're not going to be made more whole. You're not going to be made better than you are. You're going to be made mostly whole, but it's
correct.
Of your annual earnings, and if you're heavily bonused, you have to prove that those bonuses are consistent and regular. So it's heavily income rated. But like I read a GoFundMe, a story. This guy was a hero. He protected his kids in a car dealership, and he got shot 3 times, and then he got fired from his job. I'm like, oh, if this poor schmuck had a disability policy, he would have needed a fucking GoFundMe. I'm an asshole when it comes to that. And then I made a donation, right? Like I cursed at him, and then I sweetened the pot a little bit. Like, here you go. I feel bad for you.
You left a little comment on there. You should have had disability insurance, but here's some money.
But here's $50.
Yeah. So this is something that
it's the unknown. We just don't know. And that's why we buy insurance. We posted on Instagram the other day, this week, insurance is not a maintenance plan. It's there in case an accident happens. And it's same thing with homeowners insurance and business insurance and life insurance and disability. It's not there to use it. It's there in case we need it, and in case a life-changing event happens, that we have it. So putting away a percentage of your income to cover your insurance expenses for your homes, your cars, your family, your life, your disability, it's an investment in the unknown.
Right. The likelihood of becoming ill or disabled due to an accident, for example, during your peak income years is much higher than you passing away and dying.
So
much higher.
What's that?
But it's not advertised. Do you ever hear a commercial for disability insurance? All I ever hear is life insurance commercials.
Yeah.
That's all you ever hear is life insurance commercials.
So disability, does that mean that like you were injured on the job, or it doesn't matter? Like disability is disability. You can't work anymore.
It could be anything. Yeah.
What?
It's an accident, any accident or illness related.
And like, is it like a difficult, you hear about people like, you hear about people, they had union jobs, they fell off the scaffolding, they hurt their back. They're like, oh, I can't go back to work. And then you see them at home, like fixing their roof, but they have to have like a mask on their face so nobody could see them actually doing it. Like, how do you make sure, like, is it like, are people just, how do you make sure that people are legit, and are you constantly bothering them if they have this disability insurance and they have to use it? And then does the insurance company just keep checking up on them to make sure they're actually sick, or how does that work?
They do. Yeah. That's why disability policies have a waiting period.
Okay.
It's usually 90 days, minimum 30 days in some instances. And that's really the insurance company doing their due diligence to make sure that you are insured, checking with your doctor, and everything is legitimate before they actually start issuing the benefit. Yeah. That's why there's a waiting period.
So disability insurance is something to really, and again, it's something that is as affordable as you need it to be. You could kind of, figure out what policy works for you, and then, wow, man, this, like, I'm not even BSing here. Like, this is stuff that I've never heard of disability insurance. Never heard of it.
There's more, and I think we got to get you signed up with some new insurances.
Yeah,
over there.
Seriously.
Hey, Andrew, I got my calendar open right now. If you want to go ahead and we'll do
that off the air. We'll do that off the air. But seriously, now, I mean, we covered life insurance, we covered disability insurance. Is there any other fun insurances that we needed to touch on?
You know what? I'd like to touch on this. Everything we talked about is related to individuals, families, and such. You can actually take that and put it in relation to businesses and business owners as well.
Oh.
So life insurance is used to help partners protect their interests in a business, disability as well, for example. So everything we talked about can be used for small to mid-sized businesses and business owners.
So, okay. So like you have a partner in your business. You guys could kind of sit down and be like, look, we get a policy for you. We get a policy for me. If anything happens, is that to protect the business? Is that to protect the families of the people? Like it's more on the business side, right?
Depends on what kind of policy. If you're getting a key person policy, the business is the sole beneficiary, and the business can use the funds as they wish. You did what's called a buy-sell arrangement, where you each get a policy on yourselves, and if one of the partners dies, the business gets the money and then gives that check to the family, the surviving family.
Wow.
So what you're doing is you're buying out your deceased partner, so you don't have to partner up with a wife or a cousin or whoever else might come in there and try to take his spot. You use the funds from the insurance to pay the family what they're deserved, and they go off in the distance, and you continue to manage it.
Awesome. Perfect. Aaron, did you have anything to add to that?
No, that's that all hits, and there's no more fun insurance. My brother commented, he's like, I want to buy fun insurance, and I'm fun insurance. Let me go see if I can buy that domain real quick.
This is some serious stuff, but we got to make it light so people, we got to put that spoonful of sugar on there so people really, really listen to this stuff. These are the things that they don't teach you about. People don't want to talk about because they don't want to think of their own mortality until they're, out in the jungles of South America, like sipping on ayahuasca, and all these things come up, and you're like, oh my God, what's going on? And then you start thinking about, well, eventually I'm going to die, and then, while you're out there having fun and whatnot, you're not really thinking about insurance. But this is stuff, I hope this has really burned, at least into a few people that are listening, burned some thoughts into their head about, hey, maybe I should talk to Jason, maybe I should talk to Aaron, talk to somebody about this stuff, because it's really, it's a, I'm a silly clown man, but this is some serious stuff that people need to talk about.
Yeah, cool. Yeah, exactly. Yeah, I find the number one catalyst is when kids start coming into the picture.
Yeah.
I get a lot of new clients. We get a lot of new clients, people who just had a baby, for example. Yeah. And that's all of a sudden, it's not about me anymore. It's about someone else.
Yeah.
That's the big one.
Well, that's why I'm gonna go upstairs. I'm gonna get all this stuff, all my stuff in order, and kind of get in touch with you, Jason, so that I could, maybe this evening sit down with my 9-10-month-old baby and be like, listen, Daddy's gonna die. Daddy needs to get insurance. I'd be like, what? I can't even talk yet.
You're gonna be like, Dad, I know already.
Guys,
like, where's my policy, Dad?
Where's the policy? I want the money.
Golf now and clear my head up.
Tommy in the playground already has 2 of them. What's going on here?
Oh man, well, Jason, Aaron, I really thank you guys for coming on here and talking about this stuff. I mean,
thanks for having me.
People were like, where's all the paddle boarding and the fun? I'm like, well, sometimes you gotta have a serious conversation. So, with that in mind, thanks guys for doing this. As always, guys, if you want to talk about fun things, you come see Totally Local Podcast, where we're going to talk about your own mortality sometimes. Other times, we're going to be talking to local businesses, colorful characters, and entrepreneurs in and around the Jersey Shore area, fun events and stuff like that. Guys, we got a lot of stuff coming up, this month. There's a lot of cool events coming up that we're going to be a part of. Epic shouts to LG Insurance. Thank you, Jason. Thank you, Aaron. Follow us on Facebook, Totally Local Podcast. Find us on Instagram, Totally_local_podcast. Stay in touch. And guys, thanks a lot for being here.
Thanks, Andrew.
All right, bye.